Hey everybody, Jake here with Jake Wu Market Research to go over a video on how I find reversals in the market, not only on the downside but also in the upside. You can use this pretty much this signal either at tops or on bottoms. You just use them opposite. So the way I do this is I use the MACD, I use the Williams percent range, and I use the RSI. So everyone's pretty familiar with the RSI. Some people may not be too familiar with the Williams percent range. And essentially what the Williams percent range is, it's like an ultra sensitive RSI. So the way I like to use the Williams percent range in conjunction with the RSI and the MACD is really finding kind of confluence between the RSI and the Williams percent range being oversold for a potential reversal for an upside. And then I definitely want to see the MACD also curling to the upside as well. So there's actually a few different examples here on Disney. So we'll go through a couple of them here. The first one that I want to point out is this one back in December of 2022. So what you had here was you had the Williams percent range, and notice I'm using the 10, both on the Williams percent range and the RSI. I'm not using the 14. I like to use the 10 because there's 5 trading days in a week. So if I'm using the 10, and the 10 essentially just means that you're looking back 10 days, that's 2 weeks. If you're using a 14 period RSI or percent range or any other oscillator, you're essentially looking back 2 weeks and then 4 trading days, which to me doesn't make a lot of sense. The reason that this was created, the 14 default, was kind of having to do with cycles when this was created, but I like to use anything in increments of 5, at least if you're looking at the daily candle. So if you're looking at the daily candle, increments of 5. It can be 5, 10, 15. 15 would be a 3-week look back. 20 would be a 4-week look back. And then if you're using a weekly, I like to do it in increments of 4 because there's 4 weeks in a month. So 4, 8, 12. 12 would be a 3-month look back or essentially a quarterly look back. So that's essentially how I like to do that. For the monthly, I like to do 3, 6, 9, 12. There's 3 months in a quarter. So that's kind of the logic behind the inputs and the reason why I use those particular inputs. So back to what I was mentioning, we want to see the Williams percent range and the RSI both oversold. So in this case, you can see here, if I highlight this particular reversal here, we have kind of a sustained short-term downtrend. Let me unextend this. And so what we're looking for is kind of what is potentially showing us there could be a reversal here. Well, one, you've got the MACD below the 0 line. You can see here as the price continues to move down, you can see that the MACD is starting to curl up. Now, I personally have been using the MACD for a long time, so I don't need to use the histogram. But if you want to use the histogram, definitely do it. The histogram essentially allows you to see when the MACD is starting to get closer and closer to the signal line. So notice here, I can kind of see this with my own eye without the histogram, but I've just been doing it a long time. You know, practice makes perfect. But if you want to use the histogram to kind of see this convergence between the two, you'll notice here how we're kind of upward sloping here. So these bars are essentially showing the difference between the MACD line and the signal line. So if I take a rectangle here and kind of highlight this particular one here, actually, let's just do a line. That would be easier. And bear with me, we're going to have to kind of zoom in here. All right, so if I take this particular line, and I'll make it a darker color. This bar right here is literally just the difference between these two lines. That is essentially what this is. So if you put it here, that's essentially what it is. And I didn't do it perfect. If we did it absolutely perfect, it would line up perfectly. But I need to move this a little higher. There we go. So now, when you take the length of this bar, and you pretty much just underlay it with the MACD and the signal, it's the same thing. So that's all this histogram is showing, is essentially the distance between the MACD and the signal line. So you can see here, we know that the MACD and the signal line are starting to converge because we can see the histogram going up. So that's kind of your first signal here to see, okay, well, we do have kind of convergence on the MACD as we're hitting lower lows. So you can essentially use this as divergence as well. So you've got lower lows here. You've got the histogram starting to kind of point up. So that's your first form of divergence, right? Then you have the Williams percent range oversold. That's the second criteria. And then the third criteria is the RSI is oversold. Now, a lot of the time I like to look for divergence on the Williams percent range, and then I want to see the RSI oversold. Sometimes what you'll get is you'll get the Williams percent range oversold, but you don't have divergence here. Notice that, this is the lowest low that we have in this whole area. So if you can't follow my mouse, I'm just highlighting pretty much these lows right here. This low right here was your lowest low. So there's no divergence, because divergence means that you're hitting lower lows on the price, lower closes, but then you're hitting higher lows on the oscillator. So the Williams percent range, even though we don't have divergence, it's still allowing us to see, okay, this criteria is met, it's oversold. Now, what you can see here on the RSI is you can see that we actually have divergence. So here, you can see the RSI is at 2691, and it's pretty much right here next to the RSI. As you move your mouse in this RSI area, you'll see here the value goes to 2691, and then you can see here this is 2866. So there's your divergence on the RSI. You can definitely make this kind of your own, but you need to have divergence on the RSI or the Williams percent range, or if you want an extremely strong signal, you'll get it on both. So for example here, this is the oversold, right? So this is your reversal in the market. Lower lows, MACD starting to curl up. The histogram is the bars are starting to get closer and closer to the zero line here. And then you can see here the Williams percent range oversold, RSI divergence. That is the signal for a reversal. Now on the upside, notice the same exact thing where you've got pretty much the opposite of what we just looked at, right? So if you're looking at the MACD, notice as we're hitting higher closes, hitting higher highs pretty much, shown by this upward sloping line, we are actually seeing the histogram starting to have these bars lower and lower because the MACD is starting to get closer and closer to the signal line. So there's your first form of negative divergence. That means that you're hitting higher closes, and then you're having the MACD kind of move the opposite way with the histogram. 2, you've got the Williams percent range. The value here is negative 0.47. The value here is negative 2.25. That is, maybe you can't see it visually, but that's what I like to call mathematical divergence, because sometimes these divergences you can't really see visually. You can't really say, okay, that's definitely a higher low or that's definitely a lower high. So sometimes just put your mouse over the points like I'm doing here, and you can see same thing. If you look at the Williams percent range, as I'm moving this, you'll see that the values are changing. So that's how I can see negative 0.47. And then you can see here, that's how I can see negative 2.25. So that is negative divergence. On top of that, and kind of this is what you really want to see for a very high conviction reversal, you also have the RSI showing divergence here as well. So MACD curling down, histogram is starting to go down, percent range is starting to print lower highs, the RSI is starting to print lower highs, and then this was definitely your kind of exhaustion candle here, and that's your reversal. So that is how I find these reversals. Now, ideally, I like to actually see these on weekly and monthly charts for even higher conviction. They work great on daily charts as well. The lower time frame you go, the more noise that you're going to get. A lot of the time, you will essentially have these false signals a lot more on the lower time frame, simply because there's a lot of noise. The higher time frame you go, the less noise that you're going to get, the more that the market is just doing its thing. And that's true supply and demand, looking at the daily, the weekly, the monthly. If you're trying to do this signal on a 5-minute or a 10-minute chart, maybe it will work, but I would say the conviction is a lot higher and the probability is a lot higher when you see these types of setups on daily, weekly, monthly charts. So we'll do another one, a quick another one. You can see here back in June of 23, this is actually a trade that I took. So same thing, you've got lower lows on price. You've got the histogram starting to move up. You can also see just kind of visually that the MACD is starting to flatten out and start to curl to the upside here. So that's your first signal. Second signal is the Williams percent range is starting to print higher lows. That's your divergence. Third signal, RSI is barely oversold, but it is oversold here. I'm using 30 as a threshold. I mean, you can use maybe a little lower if you want. Each stock is going to have its own personality, right? One stock, let's say Apple, may never go below 30. Maybe like oversold for Apple is 35 on the RSI. So you can always change this. Just double click on this and you can go to your inputs and you can, where is it? Oh, here. The RSI upper band, RSI lower band. So you could change this if you wanted to make, let's say, anything below 35 oversold. You'll see that that's how you can do that here. And if I change this color to a little darker, you'll be able to see that better. So pretty much anything under here is oversold. What you can also do is you can use the overbought, oversold gradient fill, and it will actually do it for you. So pretty much you can see here, it will fill in these areas for you. Now, the gradient fill, it seems like that is kind of stuck on the, I guess above, maybe below 30. But, I mean, you can do it either way. You can use the gradient fills on the indicator, or you can just make this darker, the middle part darker, so you can definitely see anytime price is above that threshold or below that threshold because it's not highlighted in blue. At least in my example, it's blue. So you really want to look at stocks and see, okay, well, stock A has never gone below 20. So don't put your oversold at 20 on the RSI because you're never going to get a signal. So you do have to go back and look back sometimes and see, okay, does this stock historically, what does this stock historically kind of signal overbought or oversold on? And you can essentially optimize the indicator for the particular stock that you're looking at. So, hopefully this video is helpful understanding how you can catch these reversals. MACD, Williams percent range, RSI. The MACD is just default. I didn't do anything to the MACD. I never changed the MACD just because I like it the way it is. But with the Williams percent range and the RSI, you always want to optimize that. If you're on the daily candle, use 5, 10, 15, 20, pretty much anything in increments of 5. On the weekly, use 4, 8, 12, 16 for you're looking at essentially months. There's 4 weeks in a month. So, and then the monthly use in increments of 3. So 3, 6, 9, 12. Sometimes I'll use the 8. So you're essentially looking back 2 months. I just like to use 2 as a lot of the time a look back. So 2 months, 2 weeks, those types of things. So that's where I sometimes will use the 8 period for the monthly as well. So that is pretty much it. It's really not rocket science. It's just looking at a few different patterns. You're seeing just a very quick recap, you're seeing the histogram starting to print these shorter bars, meaning that the MACD, the blue line, is starting to get closer to the orange line, which is your signal line. You can see the Williams percent range is 1, oversold, 2, starting to print divergence as the price is starting to go lower, and then 3, you definitely want the RSI to be oversold. Like the higher probability is you also want to see divergence printing on the RSI as well, kind of what we went over in this topping formation here, which was a very strong signal for a reversal on to the downside. Hopefully this video is helpful. Thank you all for watching. If you enjoyed these videos, please like and subscribe. If you're interested in getting daily analysis and trade ideas to essentially turn those ideas into your own, definitely check out my Twitter subscription. It's $10 a month. The way that I like to describe it is kind of like a restaurant, right? I'm giving you a menu of different stocks that I'm looking at with high probability setups, and then you take that menu and you order what stock that really fits your criteria as far as risk, as far as the beta of the stock. Maybe you only like to trade high beta names, names that move very strong relative to market moves in either direction. So that's why I post a menu of names. I generally do about 15 to 20 a week. I do daily updates. I do weekend analysis as well. And then I also will post many times some of my favorite setups going into the next month or into the second half of the week. And that's kind of, if you wanted to use the restaurant analogy, those are your quote unquote your specials of the day, right? Those are ones that are very appetizing, if you want to use that analogy. And those are the ones that you still have to pick, because I give 4 or 5 different names and then you make those trades your own. So if anybody ever tells me, hey, I made money because of you, I will say, no, you didn't. Because I didn't make the money. I gave the idea, you formulated it into your own trade, and you're the one that made the trade. Because I will never take credit for a win, and so that means I will never take credit for somebody's loss. All of these ideas and all of these things you do in the market are really based on you. I just like to make the process of finding these names more efficient for people who don't have a lot of time. They have a day job. They don't have time to get home and immediately start looking at the market. So that is something that I like to do with my subscription. As I mentioned, it's $10 a month. I'll put the link in the video description as well. If you have any questions, just comment below, and hopefully this video was helpful.